Welcome to our January update. January is in the books and we're starting 2026 with real momentum on the buy side. Now, January usually isn't a high closing month, but it's one of the most important months of the year for setting up deals that close later on, and the early indicators are strong. Here's what January looked like. We generated 294 introductions, held 105 calls and meetings, submitted 15 offers, closed 1 deal, and currently have 21 more deals under letter of intent. Compared to December, we saw a meaningful pickup in introductions and owner conversations, which is exactly what you want to see coming out of year end. This is the type of activity that typically translates into Q2 and Q3 closings. January included the closing of a confidential HVAC services acquisition, so we won't name it here, but this marked our first completed transaction of the year. While the details remain private, this deal reinforces a few important themes we're seeing early in 2026. Sellers are willing to transact early, buyers who stayed engaged through Q4 are positioned to move quickly, and relationship-driven off-market conversations continue to convert without competitive pressure. It wasn't a flashy deal, but it was exactly the type of business and outcome disciplined buyers are looking for: targeted, efficient, and executed quietly. One of the most interesting dynamics right now is the disconnect between public markets and private business owner sentiment. So far in 2026, markets have been choppy and in many cases down. Yet optimism among business owners appears to be rising. Concerns feel relatively muted, and more owners seem confident in their 2026 performance and increasingly open to the idea of an exit. This is almost the inverse of what we saw during the pandemic, when markets were strong, but owner confidence was low. One very tangible data point supporting this shift: sell-side engagement is up meaningfully so far in 2026. We're seeing significantly more sellers signing engagement agreements compared to this time last year. That's a great sign for buyers. More sell-side engagement means more owners are thinking about selling, more businesses are quietly preparing for exit, and more opportunities are likely to surface before they ever hit the open market. On another note, we also want to flag a very specific and important policy development related to SBA financing. Earlier this month, the SBA issued a policy notice proposing a change that would, effective March 1st, require that 100% of all owners of an SBA borrower be U.S. citizens or U.S. nationals. The notice explicitly states that beginning on that date, legal permanent residents or green card holders would no longer be eligible to own any percentage interest in an SBA borrower. This is a significant shift from prior guidance, and if implemented as written, would materially impact certain buyers who rely on SBA 7(a) financing. Our view is that this proposal is likely to face substantial pushback from lenders and industry groups, and historically, changes like this can be revised or delayed before becoming final. We certainly hope that's the case. But that being said, buyers should assume the March 1st date is real until we see otherwise, and timing matters. We're actively monitoring this and advising clients in real time as more clarity emerges. More to come on this. Finally, with 21 deals currently under letter of intent, our pipeline is entering the year with real depth. One reminder we continue to emphasize: if you want to close a deal in 2026, you generally need to be under LOI in the first half of the year. Deals take time, and the buyers who close later are almost always the ones that started earlier. It's not rocket science. January isn't about closing volume, it's about positioning, and right now, positioning looks strong. If acquiring a business is part of your plan in 2026, the most important step isn't finding the perfect deal, it's starting the right conversations now and early. Thanks for following along. We'll see you next month.